In this video, I'm going to show you how to trade cryptocurrency. That's Ethereum, Bitcoin, BO, Ripple, any kind of cryptocurrency. And as you may have noticed, anyone can show you how to trade or invest in cryptocurrency. You go get a wallet, you get an account at an exchange and start buying it. But what I'm going to show you is how to trade cryptocurrency, whether it's going up or down, and how to make profitable trading decisions in any market condition. During recent uptrends, all the crypto experts were showing you just keep buying, and well, that worked for a while, didn't it? But after a while, if you continue to use the strategies that all these experts were recommending, your account would no doubt be wiped out. Okay, as you may now have discovered, it's extremely important to be able to read the market and know how to make profitable trading decisions, whether the market is going up or down. I'm going to show you some of my actual trades and demonstrate to you and explain to you and show you why I entered. And you'll be able to see yourself why I entered, and you can understand now, once you see how to read the market, how you can continue to make profitable trading decisions in any market condition, instead of just being biased to the emotional side of the frenzy of buying only. Plus, I'll show you the critical difference between trading cryptocurrencies and buying or investing in cryptocurrencies. Now, this is not intended to be any kind of trading or investing advice, and it's certainly not going to be a solicitation for you to buy any particular cryptocurrency. Trading cryptocurrencies, forex, or any other market is very risky. Don't trade with any money that you can't afford to lose, and before you get involved, consult your financial advisor. Okay, first of all, here's what you need to know up front. Trading cryptocurrencies, Bitcoin, Ethereum, any other cryptocurrency is exactly the same as trading any financial market that existed before. There's nothing new or different about the process of how you would do it successfully than you would with any other market that existed before there ever was cryptocurrencies. A lot of the people who are involved in trading cryptocurrencies were never involved in trading any financial market before this, so they may not be aware. But when you open an account for trading forex or commodities or futures, the normal process is you open an account and you deposit your capital in your base currency, such as US dollars or euros or Australian dollars. And when you trade, you already actually have an agreement with the broker, or nowadays we call them exchanges. You have an agreement that you're not going to take delivery of any commodity or currency that you're trading. You can trade the euro versus the US dollar. You can trade wheat, pork bellies, or coffee. But in the end, you're not going to take delivery of those commodities. And you don't have to worry that some truck is not going to back up to your house and say, where do you want to put all these pork bellies, sir? Because in trading, that's not going to happen. You're only going to have an increase or decrease of profit or loss in your base currency. For instance, if you enter a trade in forex, if you enter a trade on the Great British Pound versus the New Zealand Kiwi, you're actually not going to take delivery, and you're not going to make delivery of any pounds or kiwis. You don't actually have to have any pounds or kiwis to enter a trade, long or short, on the pound kiwi. Okay, so hopefully we already know this, but this actually becomes extremely important with cryptocurrencies, because we need to have a legitimate reason. Why would you want to enter a trade on a cryptocurrency? Is there a specific reason? Here's what happens, I've noticed in trading, is a lot of people want to trade a certain instrument, and they say, I like trading gold. Gold is so shiny. And Then sometimes they say, well, cryptocurrency, it's so trendy. Blockchain is so high tech. Well, what would be the difference between trading gold and oil? Gold is shiny, oil is sticky and black. Well, the purpose is to make money. So the real focus is what would be the most probable trade? When you're looking for trades, are you looking for something shiny, or are you looking for something trendy, or are you looking for something that's going to make profit? Right now, the cryptocurrency market is still in its infancy, and we have different options available, such as you can trade cryptocurrencies with a forex broker, and a lot of forex brokers have added Bitcoin versus the US dollar, and they've had that for quite a while, and now they're starting to add a few others. And so you can trade cryptocurrencies with a forex broker, and in that case, you definitely would be depositing your capital in your fiat currency of US dollars or Australian dollars or pounds or euros. So obviously, you enter and exit a trade, and what's going to happen is when you close a trade, it's going to be deposited profit or loss in US dollars or your base currency. And you won't ever own any of these cryptocurrencies, which I think is excellent because I don't want to own them. So what I've noticed is that most of the cryptocurrency experts are recommending that you go to Coinbase or some other exchange and get a wallet and buy Bitcoin and put it in the wallet. And what that actually does is you are investing in Bitcoin, you're entering a trade, and if Bitcoin is in a downtrend, your base currency is going to be going down very fast as soon as you open your account. And that may not be what you want to do, because we do know that Bitcoin is not going to be going up nonstop forever. So you should be aware that now Coinbase and Kraken both allow you to open a US dollar wallet, and it enables you to instantly process transactions or to enter trades on other cryptocurrencies. And if someone is watching this video sometime in the future, and if the uptrend resumes on cryptocurrencies, then maybe it's fine if you want to open your wallet with Bitcoin if it's rising in value. But if it's not, well, you may not want to do that. So whether your base currency is in US dollars or some other currency, or whether it's in Bitcoin or Ethereum, you still should be able to see how ridiculous and unresourceful it is as a trader to have some kind of emotional bias that attaches you to a certain outcome for a certain instrument that you may be trading. People are focused on whether they are a believer in Bitcoin, and really, as a trader, the last thing that you want to do is to buy into a social belief system. If your friends are Bitcoin believers, then when you hang out with them, you'll be made to feel that you need to also conform to also be a Bitcoin believer. And the believer in Bitcoin will believe that Bitcoin is the future of currency on the planet Earth, and it doesn't matter what happens, they're not going to stop believing that. And so it might be better to not be committed to that belief. And for me, I've always been a nonconformist, and I've never cared what any friend or anyone else believes in. So I don't really care if the whole world thinks it's going to be the future of currency for the planet Earth. Maybe it will be, and that's fine. But I still kind of have some doubts about that, and it seems, actually to me, it seems very likely that Bitcoin will become obsolete and will be replaced by some other cryptocurrency, and in the end, people will have a cryptocurrency that may not have any value. With trading, it's much better to not have that kind of emotional bias and to be free to make your own decisions and to base that on a scientific observation. You can look at a chart and see this market is going up, and you can tell if it's going to turn, although a lot of people are not able to tell when the market's going to turn. But for us, in our community, we can tell if something's going to turn. And that's why with Bitcoin, for at least a week before the recent turn, everyone was anticipating it was about to turn. And now that it has formed almost a complete correction, I'm still watching in case it does form the end of a correction. But I don't have any emotional bias about that, and I don't really care whether Bitcoin's going up or down, and I haven't made any commitment to a core belief that Bitcoin is the future of this planet. Rather than take your life savings and go down and use it to buy Bitcoin, wouldn't it make sense to enter and exit trades and get profit and then just move on to the next trade? Right now, a lot of people are afraid that they're going to miss out. There's going to be some new cryptocurrency that's going to explode like Bitcoin. And so now there's hundreds of these new cryptocurrencies every day popping up here, here. All these new cryptocurrencies popping up with this initial coin offering. Oh, I got this new initial coin offering. It's called My Dog's Asium. It comes from my dog's ass. And you can still get in while it's at the ground level opportunity. And these kind of bogus scams are being presented to people for investors with reasons why they should invest in an initial coin offering. And the probability of choosing one that's going to become worth something in the future is so low that there are so many better things you could do with your time and your money than to be making bets on some initial coin offering.
Is Bitcoin the future of currency on planet Earth? I don't know, and I prefer to be uncommitted to having that core belief about that. But if it is actually in an uptrend, I can see that, and I can enter and exit with profit, and I can tell when to enter. If it's going down, I'll short it, and I'll also make profit. I remember when forex trading was first getting popular, I got interested around 2004, but it was first made available as a retail market around 1996 or 1997. Prior to that, only large institutions had access to trade forex. When I got interested in 2004, there were many people and companies promoting various products and services related to forex. Some had ridiculous names designed to appeal to a new generation of traders who were unaware of even the basics of trading financial markets. Forex Mega Matrix Dominator System. Forex Turbo Laser Annihilator Vengeance. So I discovered that the actual trading methods used in all of these systems were basically pitifully borrowed methods out of some basic trading book you could go down to the bookstore and get and just copy one page out of the book and then turn that into the new Forex Turbo Laser Annihilator Vengeance system. All of these methods were already known in the trading community. And they were all made and sold not by anyone who actually knew how to trade, but were just thrown together to have a product. People would go from method to method and use all kinds of proprietary software and indicators, then robots and now signals, none of which came from someone who actually mastered the ability to read the market and make consistent winning trades, using an actual skill that can be proven and demonstrated. What I discovered is absolutely true is that trading financial markets was the same before Forex became popular as it is now after Forex became popular and in the mainstream. How much more is this true now with Bitcoin and cryptocurrencies? People who have no idea how to trade financial markets are buying these cryptocurrencies, having absolutely no clue what they are doing, and then becoming known as experts because they knew how to get a wallet and open an account on an exchange. I saw a video of a college-age guy saying he and all his roommates at the fraternity had made lots of money with cryptocurrency. But the thing is, they had never seen a trend before. They're not familiar with financial markets, and they didn't know that this was a trend. They don't know what a trend would look like when it's about to turn. And the method that they were using, which was to buy into fear. How exactly do you buy into fear? Well, whenever there's a red candle that appears on the chart, you just buy. Buy the dip. Also, I saw that recently on an article on Bloomberg that's becoming a popular term. And when the stock market dropped with one wave, people thought that that'd be a good place to buy because they can't tell what a correction looks like and what it would look like if it was over. Typically, corrections don't just make one straight wave and then they go back up. So buying a red candle or buying the dip doesn't necessarily work. And if you saw some of the videos that I saw during the time when the trend was up, and you saw the methods that these experts were using, if they continue to use those methods after the turn, their account is now completely wiped out. Financial markets have been making the same readable, identifiable patterns for decades before crypto ever existed. Variations of the same classic pattern have been forming in financial markets for decades before crypto existed, and the way to trade is to be able to read the patterns that financial markets continually make. When you learn to read them, you can open a chart, you could trade Bitcoin or oil or Amazon or Facebook, gold, Etherium, or wheat or coffee. There's no new method of trading cryptocurrencies. There's no special high-tech software needed or high-tech insight into social trends. Okay, so how do you actually do this? Bitcoin formed a great big trend, and then it formed a turning point, and then there was this big ABC shape over here, and because of that, I was expecting this to go down, and then just recently, right in here, the newspapers were, or not newspapers, but the internet news was all saying that Bitcoin had found the floor, and found there was a big rally. But it's so obvious that's the shape of a 1, 2, 3, and that's ABC of 4, and it still may not be over, but I just want to enter this shows something that will probably keep going down. Like this is ending the 3 of 5. We'll probably keep going down. So I'm just going to enter a trade with one lot. And then I'm going to look at Ethereum. We'll just compare that side by side. And we'll enter one on Litecoin. And of course there's many other cryptocurrencies, but those are the main ones I have on this platform. So later we'll be able to see how those compare with each other, and then what I want to demonstrate is how does that compare overall to trading forex, and why would you trade Bitcoin as opposed to trading forex. Okay, so now it's January the 24th, and I'm just observing the shape that I have on here, and so far this doesn't look like the continuation of the uptrend. Notice the shape on the daily. We still have the ABC, if that is an ABC, assuming that this is still a correction and eventually this will go back up. This turn right here that happened the other day just happened to get in there, and now I can see that so far it's not forming the impulsive shape of a 1, 2, 3. It's forming the shape of an ABC. So I'm going to get out. Bitcoin. Close. Ethereum is the same thing. Notice that you see the shape of an ABC on the 1 hour. If you go back up, this is probably still wave 5 going down. This is probably like a wave 4, and ABC probably go down, make a wave 5. So you're going to get out of Ethereum. That one only has 54 pips. Litecoin has, or dollars that is, Litecoin has $2. Anyway, now you can kind of compare what those are like. While I'm here, I'll just go ahead and go short. Even though I actually think that it's going to go up a little bit before it makes the turn, because if that's a C, I'm actually seeing more of a 1, 2, 3, 4 shape. I don't see the 1, 2, 3, 4, 5 shape. So that'll probably fill in later, and that's probably not the turn. That's just a temporary pullback at the previous high. A C is supposed to go past the high, so the people who are selling at that high doesn't really have anything to do with that. Okay, now it's January the 31st, and I'm still short on Bitcoin and Ethereum. Once you understand how to see these things on charts, it can become very obvious. But apparently for most of the world, it's just not obvious. For instance, when Bitcoin was at the very top of this trend, that was very obvious for anyone who can see trends. If you ever saw a trend before, you would know that that was the top of the trend. Now we see if this is a correction to the trend, then we are getting close to the end of the correction, because we've had an A section. And I know if you mention anything that is related to Elliott Wave, people freak out and think, oh, that's completely subjective. Each person can see a completely different count. Well, only blind people cannot see that this is a trend and cannot see that this is a correction. That's not a theory. That's actually what the market did, and that's scientific fact, and it's documented on all charts throughout the world. And the shape is obvious, and that's why I knew that this was not finished going down after making a wave 3, because I have noticed over the last 10 years that all financial markets never turned after a wave 3. Almost never. So that's why I knew that this wouldn't turn at that point either. Then when it formed this shape, anyone who has ever seen the shape that financial markets make would know that that is the shape of a correction, and that the market always goes down after that shape. And then when you combine it with this shape, you can also, this whole time it was obvious to me, and I think that I mentioned that earlier during this period of time, and that's probably in this video, that this would keep going down. So that's how I knew it, that it would keep going down. And that's how I know every day when something will turn or keep going and things like that, because you can tell by the shape that markets form, and that it's a language that any human being should be able to read, just like if you were learning to read French or Chinese. It's not finished going down now, and this is how I knew it was going to keep going down. But I can imagine if somebody is watching this later into the future, after this has turned, because so now this trade on Bitcoin with one standard lot is up $863 in profit. Earlier today, before it turned up like this, it was over $900, and it's still going to keep going down. It's not going to turn there. You can tell that it's not going to turn there. And Ethereum is negative 58, and this is not really a reflection that Ethereum is not as good to trade, but in a way, this is just reflecting how this one has been more bullish, which should be a good thing for Ethereum. But during the correction, it's still a correction, but it was more bullish. And when I went short, it was premature, and it went up after I went short. But apparently this one is not finished going down either. And whenever the turn is going to happen in the cryptocurrency market, it's very likely it's going to be the turn on all of them at the same time. Here is the pattern of Litecoin, and this one is perhaps even more clear than Bitcoin. And as I often use silver to help me to identify what gold is doing, because gold is more distorted, just like Bitcoin is distorted with excessive emotion. Gold is also the same way, and a lot of times the patterns are much clearer on silver. So if you're just analyzing what's happening in the cryptocurrency market, you can look at all other cryptocurrencies that you have charts for. That is very clear. It's working on the wave 5 of C, and soon all cryptocurrency is going to turn back up, I would think, unless this could convert into a longer term downtrend. But now it's looking very likely that the turn is going to happen very soon. And that is how you trade cryptocurrencies and Bitcoin. Although I may not be able to show someone how to become a master of trading in one quick, brief video, as maybe that's what you would like, but it's probably not really possible for a person to become an experienced brain surgeon watching one video on how to do brain surgery. And the same thing with trading financial markets. You may not feel like you're completely a master of it after watching one video, but hopefully you can see that there is definitely a lot of probability, a light at the end of the tunnel, that you can master this and practice it and learn to see these things. So the main thing is you learn to see the shape of patterns on the chart, and you can combine that with just keeping your ear to the news sources just to know what's going on in the news. But overall, if you were relying on just news and commentary and so forth, you would probably be buying at the top here, probably be buying here when it's not turning, and things like that. Okay, here it is. It's February the 1st, 2018, and I'm just about to exit my short on the Bitcoin US dollar. For people who actually look at the market, it's kind of funny to say, but you know, all traders around the world are looking at the market, but they're not seeing this. And the shape that's forming here is the classic shape that forms every day on all financial markets, throughout the forex market and all other markets too. It's just a natural phenomenon that anyone can learn to read. I guess it's better that people don't know how to do this, but it's very, very clear and easy to see. There is a skill that can be developed to help you to be able to see these things more clearly, and it's like learning a new language. And whether you're learning Chinese or learning to speak French, in the beginning you learn what the different shapes mean, and in the market there are really clear shapes that the price itself forms that has a consistent meaning, and it does it over and over again. So here you go. That's the ABC. If that's going to be an ABC, there's 1, 2, 3, 4, 5 of C. This is going to be the place where it's very likely that Bitcoin could turn. And I'm not ready to go long, but I am going to exit my short. Let me show you in more detail. So this is a daily time frame. When I go down to the 1 hour, this would be a good place to exit, and then if it forms another correction, I could get back in and go short again. But if it doesn't do that, when it makes the next turn, I could go long, or I could wait until some other confirmation occurs. But if I go long, then later, if I saw that it was making corrective moves, then I could get out with profit. So I'm just going to go, I'm going to exit this trade. Bitcoin's at $1,200 profit close, and Ethereum is still negative, but you know, that's not a good comparison, because it's actually a good thing. As why it's negative is because it has been a better performing pair going up and stronger going up. Even if this is a correction going up and a downtrend going down, the place where I chose to get in was not the right place for the end of the correction.
Okay, it's February the 5th. I'm looking at Bitcoin on the daily, and what I'm seeing is that it's not turning. There's no sign that it's turning. I was alert for a possible end of a correction and could show you it would look like if we had it. So we have the possibility of an ABC, and then inside of the C, a 1, 2, 3, 4, 5 shape. Now that this wave is longer, that's going to need to be revised. It's not even clear whether that's a 5 of C. Once the wave gets to be long like that, then it's starting to look like something else. So what happens when it starts looking like something else is that this could be 1, 2, 3 of 5. And here it wouldn't even look like an ABC. It just looked like a downtrend. So just being alert for the possibility that this is morphing into a different type of a pattern. The important thing is that I haven't seen an end of a correction. I haven't seen a long entry. No sign of a long entry on the 4-hour either, but there was a possibility that this could be 1, 2, 3, 4, 5. But the problem is that the normal shape would have a long 3 and a short 5, and so when you're watching something in the process of unfolding, you know, maybe this could form a turn, and on a shorter time frame there's 1, 2, 3, 4, 5 of 5. So if that turn today or tomorrow, I might believe it. But the fact that this potential wave 3 here is not distinct and is not long is a possible red flag there. And then in addition to that, there is the possibility that this may even be 1, 2, 3 of 5. Now, I was trying to see a more optimistic possibility that this is ABC of 4, and that this is the 5 itself, but it could actually not be that. So I'm going to continue to wait and to see if anything looks like a turning point that is different from, these places in the past, there never was a time before when it looked like a turning point. If people thought that something looked like a turning point, it's because they don't know what an end of a correction or an end of a trend looks like. Okay, now it's February the 27th, and I'm looking at crypto again today, and here is Ethereum on the daily. We have a classic shape of an ABC correction, and anyone who's ever looked at charts and actually looked at them in a way where they were having an intention of reading the charts will be able to see that markets form trends and corrections. And if you are not aware of that, and especially if you have been looking at charts before and you're not aware that charts form trends and corrections, then somehow you have been led astray somehow, so that you can't see the thing that the market actually does. But what we have here is the shape of a correction relative to a trend. And what I've been noticing is this is common to all cryptocurrencies, more clear on some than on others. Bitcoin is more distorted compared to the ones that don't have excess emotions on both sides of buying and selling. So when I go to the 4-hour, I can see a shape of a trend, and if I were counting it, I would see 5 waves, but I know from experience that if the 3rd wave is shorter and the 5th wave is longer, normally that means that there will be another wave, and that whole subdivision may still be part of a bigger trend if we go to a longer time frame. But there are 5 waves, and it has now turned just within the last day or so, and I'm just noticing that that is the shape that we have. It's not
the normal shape from the end of the trend, and is very likely for this to go down again. Here's the same thing on Bitcoin, and this has really gone past what would be the shape of an ABC. An ABC has a specific shape that is more like this, where the angle is not steep. Of the three waves together, the angle is more this type of an angle, and the A and the C are about the same size. Now that it has done this, it's gone into some other thing, some other big downtrend where that is just no longer an ABC. And so then you could speculate about what it might be. It might be 1, 2, 3 of a great big A. If the A is forming on a longer time frame, this could be a much bigger A instead of just a simple ABC visible on the daily. Then we have to go to the weekly, and when I go to the weekly, I can't really see it clearly there either. So at this point, in order to trade, fortunately, you don't have to know exactly what this is doing. But if this is making a much bigger ABC, it would look like this. And believe me, by the time I see these waves, I will know it's going to go down again. And now this just looks like a straight line on the weekly. So that could just be an A. And what we're looking at is more likely to just be an A than to just make an ABC and continue back up. And that's what's so important, is to be able to identify the ends of trends and the ends of corrections, rather than to just look at a chart and say, oh, is it going up? And, oh, it made a red candle, I'm buying it, now it's going up. Markets don't do that. What they do is they form natural patterns of trends and corrections, and you need to be able to read them and to know when a trend has stopped, when a correction has started, and what type of a correction is forming, what does it look like it may be doing, and where in this whole process would there be a high probability place to enter a trade. So far, we've had some high probability places to go short in here, and it's still going down, and if we had any more corrections that were identifiable, we could go short again. But looking for the end of the trend is currently a little bit more tricky, and I don't think that this is actually the end of the trend on any of the cryptocurrencies. That last piece on Ripple is a little bit less distorted. These 5 waves are kind of the same size, but actually, to be normal, the 3rd wave needs to be long, the 5th wave needs to be short compared to the 3rd wave, and these are all about the same size. So it's just not 100% known. It's not known whether this has ended the trend. You can take a risk by saying this is a place where it might have ended the correction and the uptrend has started. Put your stop loss below this low, and if it goes below that low, you have lost that trade in taking a risk to find out.
Okay, today is February the 19th, and even though I do live analysis every day, I'm working on making a video here where I'm attempting to document the process of how to trade, and it's been going on for about a month since I first started this. But just want to show you. This is Neo, and I'm comparing this to all of the cryptocurrencies in order to see that there is a common pattern among all cryptocurrencies, including Bitcoin and the rest. But there was a time when this could have been an ABC, and then normally that's followed by a continuation of the uptrend. And you can see all that by the nature of the price action. And some people can't see it, but after we got to this point, I can now see that the nature of that movement is corrective relative to this movement. So that's indicating that this is probably going to turn soon and continue to go down, and that this won't be the continuation of an uptrend, and that's it's not an ABC. And
you can clearly see that, and it's on the nature of the price action relative to each of these sections here. And you can see it on Bitcoin. It's now also hard to say if that's continuing the uptrend. It's a little different angle, but it's still very likely that this could turn. And since I've been working on this video for up to a month to try to document some turns, it takes a while. And like if this doesn't turn, that's not going to affect any trades, but we can see that there's a possibility that it's going to turn, and we know how to identify if it has turned. Ethereum is another cryptocurrency that produces a little bit more clear patterns like Neo that are not excessively biased and distorted by excess emotions. And the same thing here relative to the movement down, which could have been an ADC. So far the movement up also has the characteristic of corrective movement, which can turn into a movement down. I may not find out the conclusion to this before putting this video up, but there'll be more videos in the future, and of course I do live analysis every day, and there are always people who in the trading world have gotten a hold of some kind of a method where some indicator is supposed to cross something, and there's a RSI and MACD, and when they cross a level you get in, and then that is exactly like trying to learn how to build a custom home after seeing someone hit a nail with a hammer and then coming to the conclusion that hitting nails is the way that you build a custom home. And I've seen people say that Elliott wave and CCI, that doesn't do anything, that doesn't work. And it's just exactly like if a person was trying to learn how to build custom homes and then they watched a video on YouTube on how to make panelized prefabricated walls, and then they actually did learn how to prefabricate walls, and so they ended up prefabricating a whole bunch of walls and said, I still don't have a custom home, that stuff doesn't work. You didn't mention that you had to buy a lot and get building permits and get an architectural design, do the plumbing and all this. And that's exactly the same thing. It's just if a person thinks that you're supposed to learn how to be a master of trading by watching one YouTube video, then chances are you will be disappointed. But if you actually invest some time in practicing it over a long period of time to develop an actual skill, then you could become a master of trading. But most people would go, practice that for 2 or 3 years? I don't want to do that. Just, where's the software? Can you give me some kind of a software? You have a proprietary indicator or a black box? How about a robot? Could you just give me a signal? Oh, what about a signal? Just give me a signal. Just give me a signal. I'm just looking for, just one trade. Show me one trade. So yeah, that's the mentality of the majority of people in the trading world, and it's kind of natural that those people are not going to get what they're looking for, and probably won't get it from watching any video. But if you do pick up some of the insight that I've provided here, it could actually help you on your way to becoming a master of trading any market, including if there was some particular reason why you could trade cryptocurrencies. Okay, as it turns out, I have not actually completed the video project that I've been working on and uploaded it yet, and therefore it's going to be very fortunate that today would be the day that we see the conclusion of the pattern, where I have been saying for several days that, first of all, the most recent price action going down is impulsive. And relative to that, this is what is known as corrective shaped price action relative to the movement down. And this is what we know as a turning point.
So I'm identifying this point as a turning point, went short on NEO. I will expect that the next thing would be this will go down and take out this low, and then take out this low. And the next thing is I will identify when it forms another turning point for the end of the trend, and that would be the place that I would exit. Okay, here's the same thing on Ethereum. Ethereum also is a more neutral and clear forming pattern as opposed to Bitcoin, and you can clearly see that so far this looks like the shape of corrective price action, and at the moment that looks like what is normally considered to be a turning point for the end of a correction. That's where I would enter. That's where I have entered on Ethereum, and this is now going down, and the next turning point will be the end of the trend, and that will be when I will exit. Then on Bitcoin, if I were just looking at this one, I would not think that this is an end of a correction. The reason that I think that it is because of comparing it to the other ones. This one is more extremely distorted, and when it's going up, it's distorted to the bullish side, and when it's going down, it's distorted to the bearish side by extreme panic. And so that's causing this pattern to have a different shape and a different angle. That's how I recognize it, because I know that this one is distorted compared to the other ones. I've identified this as the turning point, also short on Bitcoin. Now I will expect this to go down and form the shape of a trend, and I will exit at the end of the trend.